Well, back to what I said before, they should only put their money where they themselves know a lot about where they're putting their money. Otherwise, when things go wrong, you don't know what to do. And things probably will go wrong again. You mentioned the 70s. David, we had big inflation in those days, and as you point out, it's worse now. David, in 1980, the interest rate on United States government treasury bills was over 21%. That's not a typo. They had to raise interest rates what would be extremely high now in order to kill inflation. Interest rates are nothing compared to 21% now. So if we're going to solve this problem, we're going to have to face a lot of pain. Do I like it? No, but I have to deal with facts. Do I think they've gone high enough? No, it was only less than 2 years ago that the Federal Reserve was saying there's not going to be inflation. And then they said, oh, it's temporary. Don't worry. This is transitory. These guys don't know what they're doing. Most central bank officials or bureaucrats or academics, they don't know how the world works. They just want to preserve their job. But you said they've raised interest rates. Sure, they have. But I repeat, they were 21% on treasury bills, short-term treasury bills last time around. So no, we're going to have a lot of pain before we solve this problem. Well, this is 2023, and 2022 is finished. I don't think we have those risks. And if we do, David, we have a very serious problem if we're still worried about 2022. No, the biggest risk of the central banks, not just the Federal Reserve. The guy in Japan has said, he will print his word unlimited amounts of money. And he does. Goes to work every day and prints as fast as he can. We have a lot of central banks doing things like that. Therein lies our problem. Whenever you have a lot of money printing, it distorts markets, it distorts inflation, it distorts interest rates and gigantic debt. In 1980, America was a creditor nation. We were still a creditor. Now we're the largest debtor nation in the history of the world. Big things have changed since then, but not for the good, at least not as far as an American, which I am. No, I see what's happening. There was no there was still red China then. There was still Soviet Union then. A lot of huge things that have changed in the world. Unfortunately, I am always worried about that. History is pretty clear that we've had many, many wars in history. There was a study recently of American history. America's been around since 1776. In every year except 15 of those years since 1776, America's been at war somewhere. Do I like that fact? Do I like that statement? Of course not. But we, for whatever reason, I should say Washington, for whatever reason, seems to like war. So there's a very good prospect. You see what we did in Ukraine. We jabbed the Russians as often as we could. You see what we're doing in Taiwan. Nancy Pelosi flew to Taiwan. She must want a war to fly to Taiwan to jab the Chinese in the face. Why do you have to do that? Let's try to solve problems, not aggravate problems. Well, I have had investments in defense at times in my life. I don't think I have many now, if any. But no, certainly if we're going to be war, military companies will do very well. They always have. I don't think I have any investments in that sector right now. Maybe I should listen to Kitco and go and look for some this afternoon. Well, I read the same things you do, and I listen to Kitco. The problem is it's very rare in history that everybody has known that a recession is coming. This is the most broadcast and most forecast recession that I've ever seen in my life. And knowing that most people are usually wrong, I would say we're probably not there, depending on where you're talking about. But for instance, China has been closed. Now China is opening up. That's going to give a big boost to the world economy because they are the second largest economy in the world. So I would not be surprised if there is not a recession yet. I expect it certainly to come. David, I'm sure you're at Kitco. The third year of a presidential cycle in American history has usually been a good year in the American stock market. And this is year 3 coming up. And the reason that happens is politicians try to spend a lot of money preparing for year 4, the next election so they can get reelected. So I would imagine that things are really better than we read, just because the world doesn't work that way. If everybody knows something, it's usually wrong. Well, you just told them. You know what they know. They know what to do. They know to spend money. They know who in their constituencies wants a new park or a new school or a new road, and they'll spend it. And they will do that. They always have anyway. These are the guys who know how to buy votes. And I suspect that they will do that. That's not to say that there won't be a recession coming eventually. It's just that this, I have never seen in my investing career or read about one that was so widely anticipated and so widely forecast. The world just doesn't work that way. When everybody knows something, it's usually not right. The bottom, well, the stock market is, David, the stock market's down, what, 19 or 20%?
Something like that.
I mean, I've been around long enough to know that 19 or 20% is not very serious. Wait till it's down 70 or 80%. Wait till you see companies going bankrupt, left, right, and center. So far, this is not fun. Do not get me wrong. This is not fun. But it's certainly not dramatic or even significant in the history of financial markets. Well, unfortunately, many people, when they're down 50, 70%, say, oh my gosh, I lost a lot of money. Now I have to go back and make it back. And then they start taking more risk. And my answer to them is, no, you don't have to act quickly. The best thing you can do is to sit and do nothing for a while, recover, figure out what's going on. Because if you just rush in when you're emotionally wounded after losing a lot of money, you're usually going to make even more mistakes. So my best advice to people at that stage is do nothing, close the window, and just wait, recover, and then wait until you find something that you know is going to be good. Do not get emotional. Now, listen, I make the same mistakes, David. Don't think I don't. The reason I know this happened is because it happens to me. It happens to everybody. Well, I once had a great success in the markets, gigantic success. And I got very cocky. I began to think I was smart. I began to think I knew what I was doing. I had sold short, and I had actually bought puts and made a lot of money. So I covered my puts on the day the market made the bottom. And so I said, well, I'll wait for the market to rally, and then I'll sell short. And I did. And the market rallied. I sold short. But 3 or 4 months later, I was wiped out. And the reason I was wiped out is because I still did not know a lot about markets. I assumed that people knew what I knew, that most of the companies I shorted went bankrupt in the end. But I lost everything first, David, because I did not know enough about markets. I did not know about trading. I did not know enough how markets reacted and how the public reacted. And so I lost everything. Now, I was very depressed. Don't think this was fun. I guess I could have become a priest or killed myself or who knows what. But I didn't. All I could do was start over, and I did. And somehow or another, I survived. And my best advice to everybody is what I said before. If you lose a lot of money, don't think you have to jump in and make it up again right away. Calm down, wait, recover until you find something that you know will work.